Louis Christopher, welcome to The Business.
Nice to be with you.
Now, prices are growing at their fastest rate in 32 years. Can you take us through the numbers?
Yes, it appears as though that national dwelling prices are now rising by about 20%, or they've been rising at 20% for the last 12 months, which is one of the fastest rates I've seen in my career. Over the past month, it appears that the growth of dwelling prices has slowed a little to about 1.5%, but it's still relatively strong in the scheme of things. When looking at the individual cities, we're seeing very strong growth rates out of Brisbane, out of Adelaide, out of Hobart, but in all reality, nearly all cities are recording strong growth. In particular, regional Australia, we're still seeing extraordinarily strong growth rates for regional Australia along the coastlines, and particularly for houses where they offer greater space for people looking to work from home.
Well, nationally, prices are up 1.5%, but this is the lowest monthly rise since January. Does this suggest that the housing boom is moderating?
I think we have seen some moderation since the March quarter, which we saw extraordinary growth at that point in time. I think there's been a little bit more uncertainty coming through, particularly for vendors. We're noticing in Sydney and Melbourne, auction clearance rates have been falling of late. And when we actually look at those numbers in some detail, we can see that in Sydney, vendors have been very keen to take a bid prior to auction, which normally indicates vendors are keen to sell. And in Melbourne, we're seeing a lot of rescheduled activity because vendors are not able to bring buyers through their property right now. So that's been creating some uncertainty in our two largest capital cities. Now, outside those two capital cities, we're still seeing a lot of confidence out there from buyers. So overall, there's some mixed signals, but at this point in time, I'd have to say that dwelling prices are still rising overall.
We know that a couple of those main centres that you were just touching on are in lockdown at the moment. What impact, if any, are the lockdowns having on house prices?
The lockdowns are creating uncertainty for sellers in particular. Sellers are trying to work out when they should list their property. Let's remind ourselves we're now entering into the spring selling season, traditionally a period where you see a strong rise in listings. And SQN Research has just published its listing numbers for August, and we've actually recorded a record low number of listings in the marketplace. So vendors have been uncertain, but what that's meant is that there's been a real shortage, a current shortage of properties for sale, and that's been squeezing prices upwards. So yes, uncertainty, the lockdowns have created uncertainty, particularly for vendors, maybe perhaps less so buyers. But overall, I've got to say, despite the lockdowns, despite the uncertainty surrounding the economy, we're still seeing a rising housing market.
I noticed, Louis, that Darwin still has the second highest annual return, but it posted a negative monthly result. What's going on there?
Darwin's numbers generally jump around a fair bit, but over the past 12 months, we've seen a strong rebound in the housing market, as we have seen with the local economy. It's actually been one of the cities which has benefited, I guess, from COVID, in the sense that many people have been looking to move away from the larger cities and move to cities where there are less lockdowns, there's generally no COVID, and Darwin's definitely been a beneficiary as a result of that.
And the numbers for Perth were withheld. Do you know why?
I believe CoreLogic of having some problems with their index in Perth. Now, we have our own numbers, and we actually recorded a fall in asking prices for Perth, so vendors became a little bit uncertain during the month on our numbers. We do know that the rental market in Perth continues to boom. We've actually seen rents jump by over 15% over the past 12 months, but it hasn't really fed through yet into dwelling prices, and that has actually surprised us.
If I can ask you about housing affordability now, in the data it's shown that the performance gap between capital city houses and apartments is narrowing, which would suggest that housing affordability is going up. Is this another problem for first home buyers? Is that what you're seeing?
We have noticed that there's been a bit of a turnaround in performance for units in recent days and months, where previously buyers have been staying away from units, and I think that's because they've been looking for larger properties. But as a result of a boom in house prices, first home buyers have generally been looking for just getting into any property, and so units have been coming back into play once again, despite concerns about smaller dwelling sizes and being closer to the inner city areas. And yes, I think in part that is an affordability issue. It's no secret that house prices in Australia are running well and above fair market valuation right now, particularly in our two largest capital cities. So it's no surprise that buyers are starting to look at units again.
And that trend towards the regions, which we've seen spike compared to the cities, because we've got all the sea changes and the tree changes moving out of the cities, where do you expect that trend to go? Do you expect it to strengthen or the momentum remain the same, or do people pull back once we're out of lockdowns?
It's been our view that once we finally see COVID behind us, that the demand for regional living may well reverse. And we start to see a little bit of that reversal in the months of May and June. But given the most recent lockdowns hitting the country once again in our two largest capital cities, as well as Canberra, basically I think we're going to see ongoing demand for regional housing continue well into late 2021 and into 2022.
Louis Christopher, it's been great talking to you. Thanks for joining us on The Business.
Thank you.